Thank you for coming. The title of our session today is How to Attract Investors and Maintain Them to Raise Millions for Apartment Syndication. I know this is really going to just be touching the surface of just kind of what you'd be looking to do. But what I want to do is take you through some of the things that we focus on here at PassiveInvesting.com, kind of tell you about how we not only secure capital, but actually bring that capital in and then also maintain a lot of the folks that we're doing. So what we're going to be covering today is I'll do just a quick introduction. We'll go through the strategies for attracting high net worth and passive investors, the difference between raising capital and securing capital. Some of you might not know that difference, but there is a difference, and we'll go through that. Then the process of actually securing capital, and then steps to maintain passive investor relations in between. I will have my Q&A box open here, and we'll address the questions as we go along. But yes, let's kick in. So just a little bit about me and kind of our background. Again, my name is Rob Gallo. I'm the Director of Investor Relations. I was a consultant in a previous career for about 18 years of my life. I switched over last year. I've been an active and passive investor for 12 years myself, specifically with PassiveInvesting.com and some other firms in this space. And I have two lovely kids here on the right-hand side. That's Hayden, he's 9, and Sienna, who is 5, and my beautiful wife, Ashley. So we really enjoy kind of not being a consultant anymore and being able to have just a little bit more time on my hands to spend with my family. One of the things that I did want to point out here, why am I doing this? Well, we raised $108 million last year. Previously, we rose $300+ million. So I think this is a good segue for us to kind of share some of those pieces that we're talking about here. Before we get into all the other pieces, I wanted to pull up the investor triad. Now, I know a lot of you probably have seen this before. I know Dan Handford has really talked about this a lot, and this is kind of one of the main diagrams that you're seeing on the investor relations side. The key piece here that a lot of people like to think about is really what's the most important thing on this investor triad. And actually what I'd like to do is ask the group here through Q&A, what do you think? What's the number one piece, know, like, or trust, that is the most important piece on here? So I'm going to just open up the chat box and see what you guys are pulling in. What do you think is the number one item on this triad? So we got a trust. Yep, it's always very important. A lot of trust again. Trust me, absolutely. Really big on the trust today, which is good. We've got a like. Got it. Okay. So good answers. Where we see ourselves and where we really kind of make an impact with investors, and this is specific to this next topic that we're going to cover about how do you actually attract investors. The number one thing that we focus on is know. Because if you don't know someone, you're not going to be able to like them, and you're not going to be able to trust them. So as you think about investors coming in the door, that first piece is know. And you'll see kind of how we do that. But there is a reason why we hold these webinars. There's a reason why we publish newsletters. There's a reason why we write articles. And we want to be out there because we want people to know us. We want them to understand that we are real people. We have expertise in these areas, and that, if they have any questions, if it's about a deal or even it's about syndications or anything like that, that they can reach out to us and learn from us on those pieces. That is kind of that immediate piece for the no. Then and only then will you actually then develop the like. Because in reality, I think we all have heard this. It's within a split second, basically, that people actually say, oh, you know what? Now I know that person. Do I like them or not? Oh, yeah, I do like them, or I don't like them. But the key piece there is that you have to have that know first in order to then to start to develop that like relationship. Then from that, that's when the like then would go into the trust. Now, these are pieces here where it's once you have the know, you start to establish the like. Kind of in our journey here is when you're sending out articles, you're doing webinars, you're having conversations with investors about your investment outlook, what you're doing on the strategies for some of your deals. That's when you start building that trust. And it's at that trust stage is when you actually start to see those checks actually come in on those deals, be it 100,000, 200,000, 300,000 and up. But that's kind of really when we take a step back and say, okay, what do we have to do first? First, focus on the no. Then hopefully we'll achieve the like, and then you get to the trust. Just a few pieces on like here, because I know sometimes that's, well, what does that mean? One, be open and transparent. Don't put on some kind of fake facade where you have people saying, oh yeah, I'm the expert, and you don't know anything. Be transparent with folks. They like transparency. If they don't feel that you're being transparent and that you're hiding something, that's when that like is never going to turn into trust. So that's where you need to be. Trust, the way to actually really solidify trust, set the expectations with your investors and make sure you meet those expectations. That is the number one thing, that if you start to have that trusting relationship, you set expectations and you don't meet them, that people are going to fall out of that, basically that trust with you. Now, the great thing about this investor triad is that where we actually go from trust to know, and why this makes sense is once you have those trusting relationships and you have passive investors that actually are investing with you, you have to go that next step to actually get to the referrals. Once you have people that trust you, they're making money with you, it's kind of a positive thing for them to basically reach out and ask them, like, hey, do you have any other friends or people in your network that would be interested in these? Or could you refer anyone so we can have a conversation? The great news about that is that 9 times out of 10, if you're building a trusting relationship, they are going to introduce you to other folks or referrals. And the great news about going from that trust to know is that that person, because of their relationship with those other investors, be it their friends, colleagues, you've already actually established some credibility, so that this triangle actually starts to get a little bit easier on those referrals. And so really when we approach everything, it's about the knowing, making sure that you have that like in there, then the trust, and then building your network of actual investors by getting the current investors that trust you to refer others investors to get you back up to the know. So when you go through this and you're thinking about raising money, or you are raising money, make sure that you're thinking about, okay, on what aspect of this triangle am I actually building this relationship? So that's the first primary piece that we like to go through on any of our deals. Now, moving forward, the next step here really is, okay, Rob, great, I get the triangle. That's fantastic. But what are the strategies for attracting these high net worth and passive investors? So first thing is identify your target investor. Who is it that you want to go after? Is it anyone and everybody that is an accredited investor? Okay, that's great, but you're boiling the ocean. And by the way, just so we're clear, avatar, we like to use the word avatar in here. It's not the little blue people or the big blue people, if you will, but it's actually picking out that avatar, that person that fits the criteria that you want to go after. When we initially started passiveinvesting.com, a really good avatar for us were actually physicians, because Dan Handford is actually a physician himself. And so he was able to actually speak to physicians and understand their issues that they faced on a daily basis, and kind of their outlook in terms of helping them actually achieve passive income. So that was our first avatar that we actually identified. Now, we have other avatars that we do have, but still not as important as those physicians that we have. So first, primarily here, understand who your target investor is. And I would definitely make sure that you have some type of or some type of connection with that target investor, so that they know that you understand what they're going through and that you can actually sympathize on each one of those bases. The next piece that we have is build an authority platform. So I know I talked about the know being the most important thing. When you talk about building an authority platform, there's a reason why we do these webinars. There's a reason why we have all of our articles, Multifamily Investor Nation, and all these other pieces, because we are building a platform that basically has an authority on syndications, on multifamilies, on storage, on car washes, because we want to be recognized out in the field and with investors as being the authority on that platform. Now, I know there's a lot of different ways to do this. There's podcasts, you can write articles, you can do blogs. I mean, just as simple, one physician that actually we knew, still know, the physician just started writing blogs about, hey, I want to be a passive investor, and I want to, achieve passive income so that I don't necessarily have to kind of do the daily grind of being a hospitalist. And just from those couple blogs a week till now, this person now raises millions of dollars for investors. But it was because they picked the specific topic that they wanted to talk about and focus on that target avatar on there. So make sure that you're kind of building an authority platform. Now, the last piece here that I want to go over is go where your avatar goes. So if you go to an investment conference, real estate investment conference, and there's quite a few of them out there, you're going to be one of 500, let's say, people that are actually syndicators or want to get an investment and so on and so forth. That's great. And you can learn a lot from those conferences from an education perspective and networking in the community. But it's not necessarily where your avatar goes. If you're a physician or if you're a lawyer or if you're a consultant, where do they go, right? Certain specific surgeons, where do they go for conferences? Where do they go for events? You want to be that person that is there at those events that offers passive investing. You want to be one or two of the people that are actually there having those types of conversations, so that then the folks that are your avatar, be it the physicians, lawyers, or whatever, recognize you as, hey, this guy's here. They know about physicians and they're doing passive investing. And guess what? I've done a deal with them and that's been really good. So you want to think about where your avatar goes, where they spend their time, where they get their information, and make sure that you can link on to those. So moving forward here, I want to jump into the difference between raising capital and securing capital. For some of you, you might not know this, but there is a main difference here. Raising capital is making sure, hey, yep, I've got a deal. We're going to have some commits. Great, we raised all this money. But is that money actually sitting in your bank account? I can't tell you how many times we have conversations between what we have on our soft commit list versus what we have actually coming in the door. And we have probably a percentage, about 10% of people, and maybe 10 to 12% of people that actually do the soft commits don't end up actually funding those pieces. So really the difference in there is actually the raising capital is, yes, we have people that are interested, to securing capital is actually having the money to actually fund those deals. So when we think about just investor relations, we really like to look at it in 4 layers. The first one is actually attracting investors to really create those leads. I went through kind of the set kind of 3 things before in terms of who you want to reach out to, attracting those avatars, being in places where those avatars are, and creating authority. That's going to help you actually attract those investors to create leads. The next piece is that you need those leads to actually, you need to onboard those leads. You need to bring them into your platform, to put them into a CRM module, like we use HubSpot, but to basically meet them, have a conversation with them, understand what it is that is motivating them to actually be passive investors, what assets they're interested in. Because then and only then can you actually be more specific to create a personal relationship to say, hey, I've got a car wash deal coming up. I know in my list of people, there's about 16 people that love car washes because they want that type of an asset. Well, those are your first people that you're going to be reaching out to when you actually have that lead. The next piece then is nurture those leads and provide them information. So this is when you have them now on your platform, you've asked some of those questions, but you don't have a deal. how do you keep them fresh? So a lot of times what we do is make sure that they're seeing more information in terms of education on what's going on. So if it's specifically, if you're focused on car washes, what's going on in the car wash industry? Sending articles like from the Wall Street Journal to say, hey, this is a great article. This kind of proves our strategy. And you can either send that out to them in groups or to individuals. But that's another way that you're just kind of going back and forth with your investors to make sure that, yep, you're staying present, you're staying knowledgeable, and you're providing them information so that when that next deal comes up, they can do that. And the last piece here is secure the capital. So when we talk about securing capital, it's got to be about sending out that deal, having those conversations, being prepared for the questions that they're going to ask, and having a specific process that is set up that you communicate to the actual investors so they get that in. So there was a question that came in. I'm going to answer that right now. So you said 12% of soft commits do not come through, only 12 come through and do invest. Great question. 12% of our soft commits do not come through. So when we actually raise, we're always raising about 10% to 12% more because we're anticipating that 10 to 12% are actually not going to fund. We have processes in place to actually get that to be a lower number, and we have some metrics on one of our teams in order to prove that, but that's the answer to that. Okay, moving forward, I want to go on to the actual securing the capital process because this is very important. So again, as we talked about, what do you want to do is when you've raised that capital, great, you have investors in there, but how do you actually get them to come in? So a few pieces here. First, you have to communicate the deal. It has to be clear. It has to be concise. Do not send someone an email that has basically, volumes of information. Make sure that you're preparing an offering memorandum that is concise and clear and points out the attributes of that property, that location, specifically for that location. If it's multifamily, what's the rent growth look like? What is the community? What is the economics of that area look like? What's the actual trend for people moving into that area or possibly people moving out? So make sure in the OM as well as that email that you actually have that very clear. The next piece that we do, and that's really more about the process to communicate deals, is that we hold a webinar for each one of our deals. And it basically goes out after the key points of everything that's in the OM. But it does a few other things too. It's making sure that people actually see the faces of our managing partners and our acquisitions team to really kind of understand, yep, this is real. We understand what they're coming with, and then we can ask them questions real time in order to do that. The last piece on that is we always send a replay out. And obviously that's for people that, aren't going to be making those deals because not everyone is going to make those, but making sure that that replay goes out to your entire list of people that are interested in the actual deal that's coming forth. Next piece on this list is the soft commit process. So as part of that trust, we have to be very clear in terms of what is the process that once someone actually says they're interested in this deal, that we take them through. A key piece here is to confirm with them and let them know, hey, this is the process we're going to take you through. So once you actually hit on a soft commit, and we have a soft commit form for every one of our deals that identifies who they are, email address, phone number, how they're going to invest, be it an individual jointly or through, let's say, an SDIRA. And making sure that we have that information so that we can send them the appropriate PPM. Oftentimes we get a lot of questions about what is this process? What is that? I keep it actually in a template on my email chain to say this is exactly the process so that one, it's clearly communicating to the investor what we're doing, but two, that we have to make sure that they know, yep, they do have a process. They're professionals at this, and I understand kind of all the steps in this process. The next piece here that we have is a private placement memorandum. Obviously that it's making sure that that's accurate, that has an up-to-date pieces. I know in some of the folks that either have started raising, the PPMs can be maybe a little smaller and a little lighter, but in some of the existing operators who've been in business for quite some time, the PPMs can be gigantic and maybe needs to be refreshed. I would definitely say try to strike a pose in the middle of those. But when you do the PPM, make sure it's easy. Think about, how do I make this easy for the investor to fill out? And there's multiple tools that you do that with. We use DocuSign for our PPMs to get those signed and filled out, in which we actually highlight with notes on each one of the fields about what we want the investors to do. One of the key pieces, and I'll talk about this in a second a little bit more, but there are new portals that are out there that actually have, basically, you can build in the private placement memorandum and actually have it pull from areas of that person's account, be it the name, address, things like that, as well as actually, have kind of a DocuSign built in to those portals themselves. So again, make this easy for them. Make sure it's not necessarily this extremely arduous task, because there's going to be a lot of investors that just don't have enough time and they get frustrated with these pieces. The fourth thing that I want to talk about, so accreditation process. So all of our funds, we do require accreditation to be an accredited investor. Again, make this as easy as possible for your investors. So there's a couple ways to be accredited. You can do it by a licensed professional, a CPA, a wealth manager. We often have letters that are actually draft letters that we actually send to our investors to make sure that they have that and they can be, using that. We also have a third-party system that we use called Parallel Markets. We pay for the cost of actually our investors going in and utilizing that. But that's just another way that, let's say, if they don't have a CPA, if they don't have a wealth manager, and they do all their taxes on their own, it's another easy way that they can fill it out and make sure that they get accredited. The next piece here is the actual funding. So obviously, as some of you know, probably one of the most hair-raising events is actually sending a wire or a check and making sure that it's going to the appropriate bank account. We basically have a couple checks in place to do that. So first is, we always have them call a number for the specific deal in the specific bank account and routing number for that deal. So it's just another way to confirm that, as well as when we receive their funds in our bank account, or if it's a check, we immediately send them an email to confirm the dollar amount and what we've received. We find that this actually just brings them another level of comfortability to our investors, so they know, hey, yes, we're tracking this. This money is important to us because we know it's important to you, and we want to make sure that you understand the status. And the last piece here is communication. We want to communicate specifically right at close to all of our investors. Maybe something in the deal may have changed on the last piece. You want to make sure that that's clear and that's set out there. You also want to make sure that you're setting expectations. Okay, is this going to be a monthly distribution? Is it going to be a quarterly distribution? Are you going to be sending monthly updates on this asset, or is it going to be quarterly updates? Again, it's that another next step to make sure that you're setting expectations with your investors so you can continue on that triad of trust. So that's really our kind of high-level process to actually secure that capital. Most important, make sure you have a clearly defined process and that you can easily communicate it to each one of the investors. I know we have had a few other questions come in, but I'm actually going to wait to the end here. All right. So the next step here is how to maintain passive investors. All right. First off, this isn't really like a lot of the stuff that we do, but it's something that we talk about all the time on our IO team. Transparency and honesty. That is number one. Do not hide something. That's ridiculous. No one will come back and invest with you if you hide anything. On top of, you will get torn to shreds on social media or just by the network. I tell you, even though, yes, there's a huge pool of money out there, there's a lot of syndicators and operators. As soon as you get a bad taste in your mouth from an investor, or another syndicator gets wind of it, that spreads like wildfire. So please be transparent and honest. It's the number one goal. You would be surprised that how many investors understand, well, yep, that's the multifamily market today, or yep, that's interest rates, or we understand what you're doing and we know that XYZ has to occur. They do understand. A lot of these are professional people. They have ups and downs in their careers. They have ups and downs in their businesses. They understand that. So please be transparent and honest if you really want to be successful on that. Obviously, we talked about this a couple times already. Monthly updates on assets. We like to make sure that specifically if it's multifamily, what is the occupancy? What are the collections? What is we trending to? When are we going to get to stabilization? What is the manager doing from a marketing perspective to build continued interest in the property? So it's a lot of those pieces to make sure that you are delivering on monthlies, and you don't have to necessarily do monthly updates on assets. You can do quarterlies. It's really up to you of what you want to do. But we find that monthly updates are good. And yeah, it's a lot of work that goes into them. And sometimes people read them and sometimes they don't. But it's always good to make sure that you're sending these updates on them, because in reality, this is their hard-earned money. And they want to know what's going on. Even if they don't necessarily see the email or they skip the email twice in 2 months, they're going to want to come back to it and make sure that they're tracking these. The other piece here is utilize a portal that has investor-friendly tools. Any recommendations on the investor portal is one of the questions. So let me tell you this. We use a tool called IMS. It's been great for kind of where we've gotten to in our growth. And it works for us. It necessarily doesn't have all the bells and whistles that we would want. In fact, we are starting to actually do outreach and understanding some other tools that are out there. Other portals that are out there, InvestNext, Agora. I'm forgetting the big one, which I'll have to follow up with you and actually put in our information here. But there's another big one that's out there that's just slipping my mind right now. But the great thing about the portal is that people love to log in, see how their investment's doing, see if something's accruing or the distributions are coming out. But it's also a great way to load up the K1s or 1099s, whatever ones you guys do, and really has that good communication to go back and forth. On top of, if you can utilize the portal to make it easier for PPMs in preloading information and even doing actually draws of cash from their bank accounts, that's a great way that's going to be more investor friendly for you. Some of these other pieces on here are really just ways to make sure that we stay top of mind. And the next one on here is physical newsletters. Now, we do send out a monthly newsletter via email. It's great, but the click rate, not everyone opens their email, or I think everyone knows that some folks around here, they've got 1,000, or I think not to be named, but maybe a sibling of mine has 15,000 emails unread in her email box. But she loves getting newsletters. She gets the paper every day. She reads that because it's a physical piece. So we know that there's some investors out there that just love to actually have a physical newsletter in front of them that could read. So we do mail those out as well on a monthly basis. And we get a lot of interest in from, hey, I read your article on the newsletter. It's just another way to kind of drum up that conversation with our investors. The other way that we do this is that we do hold dinners and happy hours. So we basically target into specific areas. Sometimes we do it when it aligns with a conference that we're interested in going to. Maybe we do a happy hour in that area. Other pieces, it's where we either have large amount of investors that have invested with us that actually kind of hit that trust piece. And then we ask them, do you have any friends that would be interested in coming to dinner and talking with us? That's a great way, again, to kind of get that trust piece going, as well as putting your trust into the investor to say, hey, you've enjoyed investing with, I'm assuming. Maybe someone else can come along and actually, meet us, shake hands, and have that conversation. You would be surprised how many people still actually want to see a physical person to make sure that, yeah, you're real. You're not just necessarily a talking head on some webinar, but that you're a real person that has real emotions and that you can actually make that connection in person. So it's another way that we like to make sure, hey, thank you for investing with us. Also bring some other friends and really getting together actually in that area, that network. I think every single dinner or happy hour I've had, there's been connections made by people being in that city or in that location. And now it's not necessarily just us that they're excited about, but it's also, hey, I just met this person at the passiveinvesting.com dinner, and now I may do some business with them. So it's just another way to actually bolster that platform that you have and make sure that people understand that the network that you have created is fruitful for them on multiple levels. So I want to stop here. I've spoken a lot. I want to see if there's any other additional questions that you all have. Doesn't seem to be too much coming in for the Q&A. Actually, while we talk about that, I wonder if I can grab that other piece. Well, if you have any, we just have some. So best practices for initial call with a prospective investor, slide deck or just have a conversation. My approach is just a conversation. It's interesting. I got together, actually, my father and a group of his friends, and they're like, we want to see the presentation. We want to see the presentation. Well, yeah, I had a presentation ready to go. But honestly, sitting down, having a conversation, understanding what it is that they wanted to achieve, what their dollar amount was in terms of retirement, and kind of what their current experience with passive investing was. Having that type of conversation then made the actual presentation that I eventually gave a lot more fruitful, because I was able to focus on certain things that I wouldn't have known about unless I actually just had that conversation. So obviously these conversations that you're initially having, there's a few key points that we always like to grab. What's their experience in passive investing? What is, are they an accredited investor or not? As well as what asset classes they might be interested in. But we also want to understand what's their motivation behind it, because you don't want to catch yourself in a situation where someone relies on a monthly distribution to live off of, and you send them a deal that's only basically appreciating and there's no monthly distributions. Again, that comes back to that honesty and transparency. If someone truly is saying, I need monthly income to live, make sure you're aligning them with that asset, because if not, it's going to cause a lot more trouble on the back end. Let's see, another question. Where to direct leads? Have you had success with offering a free ebook or other items of value to capture contact information? So we haven't necessarily used free ebooks on that information. What we've done specifically first is build out kind of our education platform that we have. So this Multifamily Investor Nation, as well as some master classes on how to be an investor, what you should be looking out for. We've got a lot of articles that are triggered to investors. Like we have an article by Dan Handford that's 8 red flags of investors. I know there are some operators that will send out hats, for example, if they have a new deal, they're going to send out a hat or a gift, if you will. We don't do that, but it might help. And honestly, there are a lot of books that are out there on these things. We do have a book that Dan and Danny just published. We don't send those out for free, but we do make sure that people are aware of it in our monthly updates. All right. Could you elaborate on the dinner and happy hour gatherings for investors? Are these typically group events? Also, do you endorse organizing client appreciation events? Yes. Okay. Multifaceted on this one. The investor dinners, yes, we do hold, and it's kind of twofold. One, it's for people to see us and have conversations with us and ask questions. Sometimes those dinners end up to be a grilling. I have been on the end of 2 or 3 grillings myself by key investors. But even when that happens and you're putting in the hot seat and you use kind of what I said before, being open and honest, you see the way that other investors actually are paying attention. And they actually, at the end of it, people have come up to me like, wow, I really respect you. Actually, you were just an open book. You were honest. That's the type of people I want to invest with. And so even though you might feel like, well, I'm getting, dragged through the mud here on something, you can basically make sure, hey, I'm being open and honest. Yes, interest rates have affected a lot of operators. Well, be open and honest about that. What is your plan that you're doing? Take their feedback, take their understanding and do that. So yes, we like to do these in group settings because we do like having that open. But when we do go to an area, if people can't make it to the dinner or the happy hour itself, we make sure that we have extra time to say, hey, let's grab lunch, let's grab a coffee, because a lot of people can't necessarily make those dinners and times. Let's see here. Could you provide some guidance on raising funds from institutional sources? Yes. So I will tell you this. We do not specifically go after institutional money. One, we haven't had to do that because our focus is on, individual investors that we do. The second piece is when you start talking about institutional money, they really like to see a lot of information on your deals. And the bigger the institution, the more information they're going to want to have, as well as then they start talking about, well, we just want to utilize you as a specific platform. So make sure that when you're actually going after institutional dollars, that you understand all of the reports that they're going to want to see, how much how much they're going to ask for access to each one of your team members, and even possibly even having some says on some of the deals that you're going to do. So just make sure that you understand all of those pieces before you're going into it. Let's see here. Oh, equity brokers. What are your thoughts? Yes, equity brokers are great. There's a lot of equity out there, and equity brokers, either they're single family, a family office, or, more just general equity brokers that have a tap into funds that are out there. We tend to stay away from them because that cost of capital is a little high for us. Have we used them? Yes, we have used them. But in reality, it's only probably to finish up a raise if we need it. And that's really kind of the extent that we do. So yes, equity brokers are out there, but it's the same thing about the cost of capital that I always say for the institutional piece. Just make sure you understand exactly what that is. All right, I think, let's see. Oh, wow. Big question here. Hold on one second. I'm going to read this. All right, this question is, are there any types of multifamily deals that would be good to invest in at this time? It seems that you all may not be working on as many deals as your prior interest rate increase. I'm guessing that the type of deals that PassiveInvesting.com refers to, not as attractive at this time, but there are other types that may be attractive. So great question. So to kind of balance off of what TK put in, we underwrote, I think it was 125 deals, somewhere in that range last year. We signed 0. The reason being, we're not going to force a deal if it doesn't make sense and if we don't think it's actually attractive to our investors. And actually, we pulled back from a multifamily deal when we did kind of our initial threshold to say, is this actually going to be interesting to our investors? And guess what? It was not the right time to raise that money in those deals. Now, I will say, we actually just opened up a multifamily deal yesterday. It is based like outside of Houston, but it's mostly, when we look at these deals, we want to make sure that it's meeting not only our strict underwriting criteria, but it actually makes sense in the market, as well as that the investors, you kind of have that right tenor of understanding that the investors are ready to invest. November, December last year, and even before that, not a great time for people to actually invest because there was a lot of uncertainty with the markets. There was a lot of uncertainty with what the Fed was going to do and what they're still going to do actually this year with interest rates. But you have to have a pulse on that, because even when you do have a deal that comes up and it's like, oh, it's a great basis and we're getting a discount, you need to make sure that there's actually some appetite amongst your investors of those deals. That needs to make sure, you need to make sure that you're touching base with your investors to understand, oh yeah, I've got 100,000 sitting on the side waiting for that deal to come in. So you really have to understand those pieces. In terms of what multifamily assets that are a great deal, I mean, again, it's got to have the fundamentals. It's got to be aligned with what you believe is the right play. I know we are looking at some more interesting deals we're looking at some single family home, multifamily areas, as well as our traditional pieces. But it all has to make sense, and it has to align with what you think actually the market can bear. So for example, don't get a variable rate loan right now. I understand that dollars might work out, but if you say variable rate in front of an investor, they're just going to laugh at you, because we all know what happened and it's currently happening with variable rates. So just make sure that you have an understanding of what your investors are going to care about and what you're going to be thinking about investing in. All right. Those are all the questions that I had. I really appreciate everyone joining you. We will have a replay for those of the folks that are not here. Again, you can reach out to me with any questions. My name is Rob Gallo. You can email me at rob@passiveinvesting.com with any additional questions that you might have. Thank you for joining. Have a great day.